All right, we're live. We're live.
All right. So
But
what's up, guys? Welcome to the first episode of our new podcast, Finance and Vibe,
Is
with
there?
my guys, OC, the man with the plan. Before me, and my brother right here. You feel what's good, guys?
how you doing, man?
We're chilling. We're chilling. We're chilling.
That's what's up. That's what's up.
Even know me as OC,
Yes.
but y'all can call me David on this podcast. Though.
All right,
It's all
so
good.
David, yeah, my name's Joseph, so we'll just keep it formal. Low key
Yeah. You
formal,
can call me
low
with
key vibes.
the lucky vibes. Yeah.
Yeah. So we'll just do a brief introduction. So I thought to you first, what was your introduction to finance,
Yeah.
and investing and things?
Yeah. Okay. So I
Like,
mean, let's introduce. We'll go around. Let's go introduce ourselves first. But if I introduce yourself first, and then
so you
and
guys,
just tell us.
I'm currently a quantitative analyst. I'm highly into investment right now. Doing some long-term investments, some trading, some trying to get into real estate, and that's pretty much it. I'm just a young man trying to make sure I'm financially free, trying to hit the millionaire mark before I turn 30. So
Yes,
that's
sir.
the hustle right now. I can see David.
What's up, bro? Joe, you want to go?
Yeah, I'll go ahead. So my background is actually in computer science, which is actually a hedge to my initial plans. I'm relatively new to investing compared to you guys, so I kind of got introduced to investing through Ife because Ife day trades, and
Yeah.
I just love seeing the emotions with Ife. You feel me? Like one day is red, Ife is going crazy, the next day is green, he's happy
Yeah.
and stuff. So that was my introduction. Also with my parents, obviously Nigerian parents, they drill personal finance into your head, saving things like
Yeah.
that. Then I read the book Intelligent Investor. So those are
Mhm.
my introduction into the things. So compared to you guys, I'm relatively new, but I'm enjoying the process so far. So
That's what's up. We have to talk about that on Sunday. I don't know if we have time today, but do
yeah.
Nigerian parents really give us enough gems for personal finances? The reason I ask that question though is because sometimes it's I don't feel like they really let us in. For most of my friends at least, who like me, their parents are doing business. Or that my dad was a businessman, and sometimes I feel
Yeah.
like there's still a lot of things that I wish he had let me in on that I would have learned
Yeah.
rather than having to learn on my own. But I mean, that's a sidetrack. But yeah, let me introduce myself. They call me OC. They call me OC means options connoisseur. Funny, it goes from my Twitter name. But they call me David. It's really up to y'all. But yeah, I've been investing since 2016. So way before the whole Robinhood craze in 2020, which is good. I love to see more people into investing. I just wish people would be more do their due diligence and take it step by step. But yeah, investing into stock market, investing to option. I do options trading. I do not day trade. I used to day trade early years, but I found I'm more profitable swing trading. So I do medium term, short term, and very long term swings. So I do up to a year, 2 year swings, 3 to 6 months, and then sometimes when I say short term, I'll do maybe 2 to 4 weeks swing options plays. So we can get a bit more into that, like difference between swing trading, scalp trading, day trading, and so on. Um,
Yeah.
and yeah, I invest in real estate as well. I own rental properties, Airbnb, and I do invest in startups, private equity investing, and I invest in almost everything, man. I invest in whatever can
That's
make me
what's up.
money, whatever can make me money legally, and is a good investment, and the returns make sense. I'm in there. So
All right.
I'm at,
That's what's up. That's what's up. That's what's up.
yeah.
All right. So let's go into just basic 101 finance and stuff like that. The different brokerages you could pick or brokerage accounts you could open, and
Mhm.
what are the things you look at or to pick a different brokerage account.
If you want to go ahead.
Oh yeah, no problem. Like me personally, when I'm choosing, like right now, I use Fidelity and Webull. The reason I used to use TD Ameritrade and Robinhood, but the reason I stopped using Robinhood was because they didn't have any charting. I started Robinhood in 20. I don't know. I started Robinhood when I was still in Nigeria, but now they're going a downward spiral. I'm not
Mhm.
trying to, shit on anybody's business or anything, but yeah, I'm just staying away from Robinhood. TD, is a good brokerage, but like I haven't been using them so actively because they've been going through so many outages. So like me personally, if you're picking a broker, you need to find someone that you know that even if the market is gonna be like very volatile in the morning, that you're not gonna be frozen out. Like for
Right.
instance, today during the election period where the stock market flew like 2 to 3 points that morning, like all the brokerages were down. You couldn't buy or sell. So like you need to find a broker that's gonna be stable in those kind of conditions. That's why I use Fidelity. And then
Right.
Webull is good for like charting. You can do some technical analysis, this and that. So I use Webull as well.
Yeah, yeah. So for me, mine is simple. I use the first two that Ife actually says he moved away from. And I think for me, as a swing trader, I'm not really into. I'll give pros. So let's back up. What are the brokerages I
Yeah.
use? I use Robinhood. I use Robinhood and TD Ameritrade. Thinkorswim, particularly under TD Ameritrade. I've been using this for the past 4 years. So I guess it's one of those things where I'm just resistant to change. I'm well aware of their issues. And I love Webull. I've actually checked out Webull. Webull is really good. In fact, if I'm to say what's my favorite among the ones I've seen, Webull has amazing data. They give you level 2 data, level 3 data. They also send you trade or plays, maybe from high momentum stocks, give you play option, which I think is pretty cool. I mean, I think amongst all the three I mentioned, I think they're the best in terms of giving you play options. It's almost like they built a community where you can even see other people recommending plays and so it's really, really cool. I like Webull. Again, if I'm to say in terms of as a new trader, if you're not necessarily having your own watch list or you want play options or recommendations, I'll say Webull is the best that I've seen. TD Ameritrade doesn't really give any. Robinhood can show you the highest tickers and lowest tickers, but say in terms of people recommending, and also TradingView is something people underestimate. It's not a brokerage, but it's just an app. So if you look at TradingView, so I'm going to try and pull it up on my phone. But if you look at TradingView, there's something that they have now. Most times, this is especially if you trade forex and if you trade because unfortunately most of the things I've seen is forex, but there are other trade options. But if you look at TradingView, there's a tab on there that's called ideas, and you can just see trading ideas. So for instance, a lot of people are talking about Bitcoin now. So you can see trade patterns for Bitcoin. Okay, what are some support resistance levels? And again, if you trade forex, most of the posts I see there under the popular tab is forex. So
okay,
but you can screen it. You can follow certain people, and you can see people who trade predominantly crypto. You can follow them, so on and so forth. So I like TradingView too. But again, it's not an exchange. I'm just giving you ideas where you can get trading. Also, you can have scanners. You have your own scanner. There's one scanner that I use. Actually, Trader Stewie on Twitter sent it a few years ago, and it's the scanner that I've stuck with. But in terms of my watch list, I sort of do my own research. I do my own due diligence and so on and so forth. But then going back to the brokerage question, I separate my long-term investments from my trading account. My long-term investments are on my Thinkorswim platform. And when I say long-term investments, I'm talking 5 to 10 years investments. I'm talking okay, the stock market should come today and say that they're close for the next 5 to 10 years. What are the stocks that I'm holding? That's my long-term investment. And then my trading account is basically what I use to swing trade, whether it's options, puts, calls, and even swing trading stocks and so on. So that's on Robinhood.
All right. Yeah, I started with Robinhood because obviously it's free, and we're just finding out on the back end the things they do to make the platform free. So that's been a red flag for me on my end. But right now it's pretty much Robinhood and Thinkorswim, pretty much those two. Thinkorswim for long term and stuff like you said. Robinhood just because it's easy, they gamified it, so it wasn't you didn't have to think too much. You get what I'm saying? Just get what you want to do. So those are the two I use. I've looked at Webull a little bit, but I haven't worked with Webull and stuff like that.
Yeah. So Robinhood so that's the thing. So this is the thing I want people to understand about Robinhood, which is the real truth. And it's something that people need to know. Robinhood is not free, even when they say the commissions is free. Their execution time is very poor. So compared to if you've traded on Thinkorswim versus Robinhood, you just see how poor Robinhood's execution time is. And most times you're buying more expensive than you would. So I'll say for large trades, even if I know my large trades, even though I know it's a trade, sometimes I'll do it on Thinkorswim because I know I could get a better entry. versus Robinhood. And
That makes sense.
people underestimate your entry price, but it adds up. It adds up. Like if you keep getting poor entries because of poor execution, it adds up. And so I know that, and I know it's something that they do because that's how they make their money. Like they give you a poor execution, they probably execute it at a better price and they take the margin. So
the back end stuff on Robinhood is a lot. You gotta look into that if you're gonna work with them.
Yeah.
So once you fund your account, right, whatever brokerage you're using, let's talk about like the assets you could get, like the assets you could buy, stocks, ETFs, bond, OC love options. So like we'll just talk about like those different things. Let's start with stocks. Can we like just explain stocks to the people that don't understand on what it is and stuff like that?
Sure. If you want to take that one, or you want me to take it?
Oh, you can take it, bro.
All right. So stocks is just simply, I mean, although these days nobody's really buying to have voting rights and ownership, people are just buying to trade the price swing. But in a fundamental level, a unit of stock is a way of buying equity into a publicly traded company, right? It gives you voting rights it depends on the shares, but all stocks give you voting rights. At least on the publicly traded market, it gives you voting rights. However little, and it's
what do you mean voting rights? Real quick, what do you mean voting rights?
So I mean, like how there's shareholder meetings. So they decide on voting rights in terms of like the executive leadership team. So part of the voting rights is the board and so on. So so you vote the board, and whether it's even like whether a company decides whether they want to change their dividends or decide to not pay dividends. These are all like things that go into voting rights. And so sometimes you could decide to essentially give it. So that sometimes even notice you work for your company and you're invested in your 401k, for instance, and you invested in certain companies in your 401k, you receive a letter at the end of the year that says, hey, are you deciding to give away your voting rights under this group so that they vote on your behalf, and so on and so forth. So just in the fundamental level, especially if you own a lot of shares, so that's why they call them majority owners, minority owners. You get voting rights in a company. And but in the fundamental level, it's just a way to have ownership in a company and have equity in a company. There are different types of ownership, but that's what a stock is.
All right. That makes sense. So most guys are investing in stocks, individual stocks right now.
Right.
That's like the trend. Let's go into ETFs. I don't think it's as famous as lots of people don't like trade ETFs or buy ETFs and stuff like that. Let's explain that a little bit and talk about it a little bit.
Yeah. So an ETF is I don't know, is it exchange traded fund, electronically traded fund? I don't know. It alternates the acronym, but an ETF is basically, the way I look at it is it's a congregate. It's pretty much just like a congregate of stocks, or just it's a fund really. So it could be a blended fund. It's a fund that tracks an indices. So for instance, if you look at the S&P 500 ETF, SPY, it tracks the S&P 500. And so the idea is that it's not actively managed. It is just a fund that automatically tracks an indices. And the advantage of ETFs is you can buy and sell at any time. Obviously, I can buy SPY now and sell it the next second. The price changes with market. It's not like one fixed price for the day, one fixed entry price for the day, or one fixed selling price for the day. And I'm making this analogies because obviously you have ETFs on one hand and then you have mutual funds on the other. And so mutual funds is a bit different. It's not just, it is a fund, just like a ETF. However, it is actively managed. There's a fund manager, and that's part of the premiums you pay. There's quarterly reports, or it could be annual reports, however much the frequency the fund issues. And it's actively managed, unlike ETFs that you can just buy and sell, much like a stock at any time. You can't. So there's a fixed selling price for the day. There's a fixed buying price for the day. Price doesn't fluctuate. Your entry price. So that's the primary difference I'll see between ETFs and mutual funds. That said, though, there is an ETF that is changing the game because it's a very good blend of to know more about this, check out my Patreon because I talk about this a little bit. But there's a very good blend of ETFs and mutual funds. It's called the ARK ETF. The ARK ETF, Kathy Woods and her team. She's the founder and CEO and CIO. She's a chief investment officer and chief executive officer of the ARK group. So they have ARK Invest ETF. So there's the ARK F, ARK Q. So they have the technology ETF, innovation, fintech. They're invested in stocks like Tesla, SQ. You can see like their investments. You go to ARK Invest stock, just Google ARK Invest. You see their website. You can look at their different ETFs and see what their current portfolio is.
Yeah.
There's also like pages on Twitter that tracks their ARK buys daily. So it's an actively managed ETF. Again, remember I said ETF is supposed to be not actively managed, but just tracking indices. But actually, I'm not sure if they're the first, but I know they're definitely the most popular. But they're an actively managed ETF, which is unique and new. They don't just simply track in indices. But unlike mutual funds, you can go on Robinhood, every brokerage, you can buy and sell ARK F at any time. So it's not like a mutual fund where you have to sell at the end of the day after 4 p.m. and you sell at a certain price. No, you can buy and sell at any time. So it's a very good blend of ETF and mutual fund. It's actually one of my favorite. I'm personally invested in the ARK F. I'm bullish on that long term. Fintech, and they're invested in SQ and others. So yeah.
I personally haven't done anything with ETFs. Ife, have you done anything with ETFs? Have you played with it?
Oh yeah, I love my ETF. So like in my long-term portfolio, I have like the ARKs that David mentioned. I have ARK F, ARK Q. I think I have ARK K. I know like this last couple of weeks where it died, a lot of them are like below 100. I'm trying to get in because I believe that in the future, Kathy Woods is apparently she's the investor goat. So I'm out here trying to ride a wave. You understand? And then like if you're investing in trading, you need to know about S&P 500 because the market moves when the S&P 500 moves, and like the market is like a multiplier based off the S&P 500. So if SPY drops like 1%, you can expect stocks to fall like 2-3% that day on average. If SPY goes up 2%, you can expect stocks to move like 4, 5, 6% on average. So like as an investor or trader, you need to know a thing about ETFs and how they're weighted. Like we have different weightings for ETFs. I learned a lot of this in school as well, but like we have different weightings for ETFs. Like we have revenue-based ETFs, we have weight-based ETFs. So like there's a lot to know about when you're looking at the whole ETF aspect. And then just like there's junk stocks, and there's stocks that we call gems, they're junk ETF. Like for instance, I don't know, anybody can put out an ETF these days, like their ETF track stocks now. I was actually invested in an ETF.
Isn't the founder of Barstool putting one out? It's called Buzz.
Buzz. I heard he had it.
I love that guy.
He had it before, and it tanked, and now he's bringing it back. So it's like you got to know whose ETF you're invested in, whose companies.
Yeah.
No, but check this out though. Let's talk about that. Like, I think that is people are giving him so much shit, and I think that's so brilliant. Like, he is coming out with an ETF because we cannot underestimate the power of retail investors now. Investors, like for the first time, like investing used to be this game that was like almost like exclusively for the wealthy.
Yeah, for the insiders.
Right. Robinhood gives as much shit. I don't give a damn what anybody. See, everybody is giving so much shit to Robinhood now because like they just joined investing, but they don't understand. For those of us who started investing in 2016. Opening my TD Ameritrade account in 2016 was a pain. It was hell. It was ridiculous. As a college student, it was ridiculous.
Yeah.
And like the barriers, like just how difficult they made. Even getting verified for options trading took months. Like it was ridiculous. Robinhood like democratized the whole investing game because a lot of these exchanges saw like, listen, if we want to compete, we have to appeal to the retail traders and stop like trying to put these barriers to entry. And so, of course, we have Webull, we have all these other guys that are coming out and building on Robinhood. Of course, if Robinhood wants to stay competitive, they need to improve their charting game. Sure. I get that. No, for sure. Let's criticize them. But people need to understand the role Robinhood played. And because of that, there's a lot of retail investors. The power, like, look at GameStop, look at AMC, look at all this shit.
January was fire. I can't lie.
Even now, GameStop is still running. Like the power of retail investors, for them to blow out Melvin Capital, their short position. That is amazing. They have a documentary coming out on Hulu, and I can't wait to watch that because Hulu's no, was it Hulu or who is it? I think it's gonna be on Hulu. I think so, but
you know what it's called?
It's called GameStop documentary. What happened with GameStop or something like that. The documentary is coming out, but I cannot wait for that Buzz ETF because they actually showed that if you track like the ETF, although it's not live now, it would have outperformed the S&P 500 by a ton. But then again, what I would say is people need to realize we're in a very bull market. We're in a very bubble phase of the market right now. It's not always going to be like this. I tell all my patrons. So I have a platform where I talk about investing, right? And I consult with people. And I tell my patrons it's not always going to be like this, though. But
yeah. Before we talk about like the other like assets we could buy and sell.
Yeah.
Like you just said, right now we're in a bubble phase of the market, and it's bullish right now. Whenever I talk to like older investors or older guys that have gone through like different cycles and stuff like that, compared to like millennials right now that are getting into the market, and everybody thinks they're geniuses right now. You get what I'm saying? You make a play, everything's up. Like you think you're good and stuff like that.
Yes, sir.
What would you say to that? Like, how do you like balance it out and be smart and do your due diligence and stuff like that?
Okay, so there's definitely a way to balance out and make sure you're not overexposed. So there are different things. Like for me, one thing I definitely look at is beta. So you look at the weighted beta of your portfolio. So look at the percentage of your portfolio multiplied by that. So if you don't know what a beta is just it's a Greek letter beta. It's if you go to Yahoo Finance, you see every ticker will have a beta. It's just a way of measuring your volatility of your stock relative to the market. So for instance, a beta of 1 means that it moves 1-to-1 with the market. A beta of 2, you can say is 2 times as volatile as the market. A beta of 0.5 means it's half as volatile as the market. So think of beta as a volatility check to see how volatile you are compared to the market. Now, people have different things. There's nothing wrong with having high beta stocks. I mean, sometimes in a bull market, you want to capitalize on that, right? So if the market goes up, you probably would get on, not exactly, but on average, maybe twice the returns because it's twice as volatile. But something to keep in mind is that when the market goes down, you could also go down twice as hard, right?
Yeah.
And so beta is just a gut check. And there's something called the greedy slash, it's called the greed factor. It's like an indicator. It's actually something that I check daily. You would Google it, the stock market greed factor. It's like it's like almost like a radar that shows you how greedy. So the whole idea is when the stock market is really greedy, you want to be conservative because and when the stock market is not as greedy, so on the other side, you probably want to be a bit more bullish and greedy.
Yeah.
Right. And so the idea is that when the stock market gets towards the greedy range, you probably want to rebalance your portfolio and make sure your beta is not as high. So that's one way to do. So there's fundamental investing as well. So understand fundamental investing. In fact, the idea that there are people investing right now without having understood like EPS, equity per share, PE ratios, read the financial statements, understand what a company's 10K is. If other people are investing without understanding, that scares me because I'm just like, so how do you know what you have in your portfolio is a good investment? Like, how do you know that this has great long-term growth? That how do you know? Like, it's good to definitely know. Okay, I'm bullish on e-commerce. I'm bullish on fintech. I'm bullish on Tesla because of electric vehicles. But you need to understand why. And it's not just enough to be bullish on a sector and just be bullish on the popular name. You need to also look at financials, especially if they have like a long-term track financial record and see, okay, is this a company I should be bullish on?
All right.
So those are just certain ways you can do it. Yeah.
Yeah, there are a lot of like questions or like ways we could like just diverge from what we just had, but we'll just try to stay on track a little bit. We'll get back to like talking about those things. So let's go ahead and like talk about bonds and commodities. If you want to like talk about bonds, commodities,
If I take that, bro, I don't do much with that.
I don't really trade bonds, but like I can give a brief overview because I'm not really a bond trader. I just prefer to hold cash as a hedge against 90% stocks and I put my raising 10% in cash. But like bonds are basically like I would say they're loans backed by an agreement. Like you can have a bond from a government, you can have a bond from a company. So like, let's say you want to buy a bond. You're basically lending out your money to a company who is guaranteeing you that they're going to pay you back by a certain date. And like, there are different types of bonds that pay you like a lump sum at the end, or they pay you like interval by interval. So a lot of people use bonds as like a way to generate cash period to period. So like, you could buy a bond that pays you a set amount every other period, or just at the end of your period. And the thing about bonds are, I won't say they're inverted to the stock market, but like in many cases where the stock market is pumping, bonds tend to go down in value because people use bonds as a hedge as well. So for instance, I had a couple bonds in my portfolio when the market started booming. Like, the market's been booming for a couple months now. And one day I'll just check my my bonds, and you see they're down 5%, down 6%, down 7%. And I'm like, okay. And that's one of the reasons why I'm not really in bonds, because I'm like, yes, people use bonds as like a hedge for inflation as well. I mean, people also use treasury bills and things like that. But like, it's not. I wouldn't say it's not really a popular investment between the retail traders these days. That's what I think.
Also, rates are down, right? So the Fed's rates are down. So that means even like the premiums you're getting for your bonds are not as high. So for most investors, the opportunity cost is just to invest in the stock market and make way more money. Also, like, screw bonds, invest in Bitcoin.
I almost hedge.
Screw bonds.
Yo, I like that position. That's what's up. Yo,
one day we gotta talk about Bitcoin in full and talk about why I'm so bullish on it.
Let's talk about commodities then.
Commodities is like gold and silver. I don't
oil. Does
Bitcoin, like, could you say Bitcoin's a commodity?
No.
I mean, wait, but like, according to the IRS,
yeah, that's what I was about to say.
Kind of classify it as a commodity in a way.
It's not.
Because you get taxed every time it changes ownership, just like the same way you get taxed every time you change ownership of gold.
Yeah.
It's transcended. It's transcended. Transcended commodity.
Well, this guy's bullish on Bitcoin. Right?
Let's talk about gold. Gold is just gold is analog version of sound money principles. And the whole idea is that there's the scarcity, there's the general acceptance and consensus of value, and there's the fact that it is a way to exchange value as well from one person to another. And it's verifiable. Of course, we know that gold can be verified, where there's, experts chemically. It is immutable, because you can't, in the sense that you cannot just create gold. Well, you can, but it's not going to be true or real gold. So in a lot of ways, it's like, you can do gold plating. I guess you could technically make it into. Well, no. Is this? I don't think there's even such a thing. There might be. I don't know. But for the most part, it ticks a lot of boxes in terms of like being a store of value. And so that's why people use gold, because people use gold as a hedge. Most times you see people buying gold as a hedge to inflation. So most times you see people running towards gold. So you say, for instance, during the whole stimulus, everybody will say like, hey, buy gold, go to your pawn shop, pick up some gold, because the idea is that as inflation, it's the same thing that happens during the Great Depression, right? As inflation goes up and fiat currency, so cash it gets devalued, people will run towards like precious metals and things that are better store values. And so that's like gold and so on. And also that also leads to Bitcoin. And a lot of people keep saying Bitcoin is digital gold 2.0. So as well, I said gold was analog version. Bitcoin could be viewed as a digital version of sound money principles. And we can go into another date about digital versus analog and why Andre's more bullish on digital. But you can just think about it as also another good hedge to inflation. I know I talked about verifiable, immutable. Digital Bitcoin is more immutable because of the hash function in the cryptography. That's why it's called cryptocurrency hash function, right? So if you try to change the input of a transaction, you drastically change the output. And because it's blockchain, So
Yeah.
each block subsequently contains information from the previous block. You try to change the output on one transaction, it affects the subsequent blocks. The people running nodes will see it. It's a peer-to-peer network and they'll reject it. And so that's why it's immutable, quote unquote. Like you cannot just change transactions that have occurred. Which is what's funny. Whenever you hear people say, "Oh my God, Bitcoin is used for fraud," blah, blah, blah. I'm like, well, actually, Bitcoin is one of the best. Let me talk about that.
Everything's used for fraud, though.
I'm not denying that Bitcoin could be sent by fraudsters to another fraudster, but the transaction itself will not be changed because the transaction will be on the blockchain. And that transaction itself cannot, like, compared to fiat, I can manipulate numbers. People can book numbers, like, and they can manipulate the books. You can't do that with Bitcoin because it's on the blockchain.
Yeah, that makes sense. Right? That makes sense.
So anyways, but going back to Bitcoin also can be verifiable. It's literally verified within minutes compared to gold. And transaction is easier because I can transact over $1 billion worth of Bitcoin if I had it technically, whereas with gold, it's going to be hard to transport $1 billion worth of gold, right?
Yeah, somebody did that recently as well. Like, I was on Twitter and I saw that somebody changed hands of $130 million and they paid $100.
Yeah, I saw. Did you retweet that?
He paid 100 what?
Yeah, I think I saw that.
They changed $130 million from one person to another person with $100 worth of fees.
$100 worth of ETH.
$100 worth of fees. Like the total fees for the transaction was just about $100, and then somebody was like, "Can you do that at your conventional bank?" And I was like, "You really can."
You really can, yeah. And then we could talk about you could talk about Ethereum too another day and the fees and everything.
We can talk about all that stuff. Bitcoin. We'll have an episode for Bitcoin. We'll just go crazy on Bitcoin and
for sure.
And all that stuff.
I'm looking forward to that.
Let's talk about options. That's where my guys are. Like, that's like the good spot. Options. I almost went bust one time in options, so I took it back a little bit, and I'm studying it again, so I don't work with options that much. Yeah. But I know OC plays with options. Etfs, I think he plays with options a little bit. So you guys can go ahead and talk about that.
Fair, want to take it?
Yeah, I'll start because I think I have the more critical point of view. So options. I'll do it like this. In general terms, option is the high risk, high reward, competitive alternative to buying stock, right? So like you could buy, so I'm sure OC will get into the Greeks and everything, but let me just start with let me give my story. So I've been trading stock. So for instance, if you buy a stock for $1 and it goes to $2, you make $1, right?
$1, yeah.
Option, there's a whole bunch of Greek alphabet that you have to know the delta, the gamma. So like, for instance, if you buy a stock at $1 and the delta is that if this stock goes up by $1, there's a 0.6 move, that means you make $60. So at first, most retail traders, they don't understand anything about this.
Yeah.
So like, for instance, the first option I bought was Tesla. And I was like, I don't believe in paper trading because I feel like you have a different mindset, right? I want to see myself losing money so I know how I feel. So I bought Tesla options. First option I bought. I made like $1,000, $1,300.
Yeah.
I was like, bang, bang. I'm out here, beginner's luck. I'm about to be a millionaire, right?
Yeah.
I held it over the weekend. Tesla had an option. I lost $2,000 Monday morning opening. And I was like,
I remember this day.
I was like, me and Joseph were hanging out, and I was like, bro, I can't drive right now. I'm watching my stock. I was day trading the option. And I was like, if you're a professional trader, day trade options. If you're not a professional trader, do not day trade options.
Yeah, you don't even. Even to jump in, like professional traders, not all professional traders even swing. That's the thing I've learned. That's the biggest thing that I say I must confess I've learned. Only 12% thereabout, 12 to 15%. Because I've been in a lot of this channel. A lot of people do swing trading because day trading is a really, really, really tough skill. The best day trader on the internet, his name is Madaz Trading. I always retweet him. Like
I see that.
Yeah, let me. If you follow me, I'll need to get. Let me see if I can pull out. Yeah, so just for those listening, they can. His name is Madaz, Madaz football, FOOTBALL, then R. Best day trader on the internet by far. This is a dude that literally, he doesn't hold positions beyond the day. He literally trades price actions within the day. He scalp trades and he day trades. And at the end of the day, he just cashes out. So he does that literally every day. That's literally the definition of a day trader. He does not hold positions overnight. His trades are literally sometimes, he makes like 4 or 5 trades. Each trades are like 5 to 10 seconds. So they're not like literally positions he holds beyond. Like he literally just trades price action. Like he sees a quick pump. But then again, he has a large account. So like he knows what he's doing. Also, he uses margin too. He margins trades. So if he'll borrow money against the exchange, margin trade, sell, take his profit and give the exchange back the margin he traded. So he's the perfect definition of a day trader, right? Most traders swing trade. They take positions. It could be they hold overnight for 1, 2, 3 days, and they buy on Monday, sell on Friday, buy on Monday, sell the next week, take a longer term position. So you see, most traders are swing traders because day trading, I think, is the hardest skill. You could be a very successful, you can see a price. So the reason why most people do swing trading, and I'll talk about this a little bit.
I like this. I like this right now.
Yeah.
I like this position you're going right now.
Yeah.
The phrase on the opposite position because.
Yeah, no, the reason why people do swing trading is because the truth of the matter is, of course, we know technical analysis. We know our RSIs. We know our MACDs. We know like our volume indicators. We know the MAs. We know the Fibonacci. We know the candlestick patterns, pennants. We know all those patterns, the diamond pattern, whatever. People need to realize this. The wider out your time view, so when you're going from the hourly chart to the daily chart, the less the noise, in the sense that these patterns tend to be more technical or textbook per se. So the things you know about all these patterns, like, okay, when people say a breakout from a bull pennant typically hits this price target, that tends to be more true and there's less noise when you zoom out. So when you're trading intraday versus intraday, so that's why I personally always use the daily chart. If I was a day trader, obviously I want to use the hourly chart or the minute chart. I use the daily chart because I look at zooming out. And so for me, it makes no sense for me. I do that because, again, there's less noise. So if I see a bull pennant on the daily chart versus a bull pennant on the weekly chart, versus the hourly chart, or a bull pennant on the weekly chart versus the daily chart, again, the more I zoom out, the more it's true. Like the textbook play is more likely to be true. So that's to say a bull pennant on a weekly chart is more likely to be true than a bull pennant on a daily chart, and a bull pennant on an hourly chart. There's a bull pennant on a minute chart. But the more out you zoom, also the longer time you need to give for your play. Think about it. If I'm trading a bull pennant on a weekly chart, I can't say, oh, I'm going to buy an option on Monday with an expiry on Friday. I think, okay, the breakout will occur within 3-4 days. Now, if I'm trading on a weekly chart, I probably need to give myself 2, 3, 4, 5 weeks for the pattern to play out. And so that's why, if you think about it, a lot of people are swing traders because, one, you're more likely to be successful trading the more you zoom out on your timeline, because you're more likely to have a textbook play, right? When I say textbook play, that means following what you learned with investing, trading, all of these books, right? But because of that, you also have to give more time for your plays to play out, because there's false breakouts, there's consolidations, there's different things that happen. And so even though I had the idea, I had the trade, it was going to be a breakout from a bull pennant. If I only give it 5 days to play out, I could lose my money, versus if I had given it like 2, 3, 4 weeks to play out, and I could have made serious bread, So most people are swing traders. That's why I'm big on swing trading. But of course, if you're a good day trader, don't get me wrong, day trade. But then again, like what Etfs was hinting at, you have to be a professional day trader. Not everyone is investing. Like when I say professional day trader, also let me make this clear. I don't care what anybody says. You cannot be a professional day trader. You're not doing it full time. If that is not your full-time job, if you don't wake up at 9 a.m. Eastern, have your screens, and sit there, obviously you have your naps and your breaks. Like there's always like your naps and your breaks to take. And most people always take that around 11:30 to 1, because then the market is always choppy. during that time intraday anyways, because it's a intraday, like they call it Wall Street lunch break. Like, so everybody goes on break. And so like price action and volumes like dips. But if you're not there full time focusing on your trades, I'm sorry, you're not. In fact, the only professional day traders I've seen that are not full-time day traders are crypto day traders, and that's because they trade because crypto is 24/7, right? So they trade during nighttime US because it's morning time in Asia, and Asia people be dumping, bro. So it's almost like a crazy. It's not like a trade pattern. Like they just short sell for like 3 hours during when Asia. Because most times you see Bitcoin dip is in the nighttime. That's because the miners from Asia have dumped their Bitcoin to sell in the market, and because obviously majority of the Bitcoin mining is concentrated in China. So we
talked about that on Twitter.
Yeah, so not to go too deep into it, but I mean, for me, options, right? So options, of course, there's the Greeks, there's the deltas, like if I mentioned, the theta. People don't realize time decay. Like the theta for not this current bull run in GameStop, but the last bull run. If you bought, I can't remember the day, but I know the theta was so insane that literally theta is essentially, it's a way of measuring the time decaying value of an option as it nears expiry. So basically, it was the same day it was expiring, the same Friday, and like I think like it was losing value of like $100 every hour, which was crazy. And that was not because of price. That was just by virtue of it is nearing its expiry. Also, theta is more intense when you're dealing with out of the money options versus in the money options. Delta, like if I was hinting, is the underlying move in the price of an options contract with $1 or 1 unit price in the underlying stock. So basically, if a theta is 2.6, for instance, let's say that's if a delta is 2.6, which is pretty high. So I'm gonna say if the stock should move $1, the contract will move, the price of a contract will move $2.6, right? But remember, one contract contains 100 shares. So that means that the total value you get is 2.6 times 100, which is $260. So yeah, that's just an example. But to know more, learn more about options trading, there's something called optionalpha.com, OPTIONALPHA.com. I think it's free, 100% free. I think it's the best options trading course out there. And also I talk about like tickers and other tips like with accumulation and distribution, timing your entry, and other things with technical analysis on my Patreon. So if you're trying to learn more and understand that, sign up. And also on my Twitter page, there's like current reviews and like feedback from current patrons. So you can check that out as well. So
yeah, I just wanted to get into something David said. You know, he mentioned the wider out the time frame. So let's say you have like a bull print on the monthly time frame, right? And this is where you should get like your difference between equities and options, right? For instance, the farther out you go in an options contract, the more expensive an option is going to be. So for instance, an option that's expiring on Friday is maybe going to be $100, right? Well, it's going to be worth $100. An option expiring in 24 months or 12 months or
much more,
might be $1,000, right?
Yeah.
So for instance, I like my long-term swings, right? So a reason why I don't have options for them is because those options are going to pass my 1 to 2% of my portfolio. Right? So that's why I like my equities. For instance, if I see a bull pennant or I see a channel on the daily chart or on the monthly or the weekly chart, and I look and I'm like, okay, the swing from this high to this low was like 2 months. I'm not gonna buy an option for that if it's past my 2%, right? So like that's a certain thing you should get. If you cannot afford an option, don't buy an option because you will blow your account.
Yeah.
So like trading is risk management. Like it's not luck.
It's not luck.
You can be lucky.
It's definitely not luck.
Like
that's the thing.
The whole GameStop thing. I had puts in GameStop, and I was like,
and you got blown out, right?
The thing is, I had puts in GameStop at AMC when it was at its peak.
Yeah.
It tanked like GameStop tanked like $200, $300, and I still lost because the volatility was decreasing.
All right.
I was losing value because IV
was your IV was reducing, so you lost value anyway. You put into a tank. Yeah. Okay, that's another thing. People need to really understand implied volatility. I promise you. Understanding implied volatility with options is your friend. Again, the Option Alpha course goes over it, but implied volatility is not only good in terms of understanding how it could affect the price of your contract, but also implied volatility is your friend when it comes to setting price targets using statistics. So 1 to 2 standard deviation. So 1 standard deviation, 1 sigma, I think that's about 63% probability of hitting a certain price.
Yeah.
And implied volatility is your friend there, because that's actually, so I use options trading for when I say long-term swings. So every first of the year, I look at certain tickers that I feel like are just going to be bullish in the year. And then I buy like a long-term swing that expires next year, January. Part of what I use to set my strike price is implied volatility and also the timeline that I'm buying at. And I talk about that on my Patreon, actually, exactly how to do that. So setting price targets for long-term swings using implied volatility to set your strike price for your options. So that's also on my Patreon.
Yeah, this guy's could talk about options all day. So
Yeah.
we'll probably, don't let's drown you out with this options talk. We'll probably have another episode where we just go into this stuff. But basically, if you're starting out, please don't play with options yet.
Yeah, not yet.
Or anything in the derivative markets. Like, focus on stocks and other things and just work your way up.
And paper trade as well.
Definitely. And just to round up, like the last thing we talk about, let's talk about like the different trading like strategies and like investment strategies. How you look at things and what you've talked about your strategies a little bit, but just some other things you do. And if you go. And,
I've like classified the types of strategies. Let me not say strategy. Let me say movements. I've classified the types of movements into 4. We have the fundamental moves, the technical moves. Then we have 2 more. I'll call them the news or the catalyst moves, and then we have the theme moves. So, for instance, I like technical trading, but I also like catalyst trading, right? So, for instance, a technical trade would be like, oh, look at support, look at resistance, look at the Fibonacci levels, all that boring stuff that us geeks like, right? News, like us fundamental news, you're looking at I believe that this company, they have a 10% increase in their PE ratio per year. Right now, the PE value would price their stock at 120. If they have another 5% move, they'll put them at 130, okay? So you hold for the quarter, you make your $10 profit, right? That would be a fundamental move. A theme move would be like, okay, Joe Biden just signed the weed. He wants weed to do our stocks are getting high. You feel me? Everybody's high. Everybody's on the THC. You feel me? That's the theme. All the weed stocks are running. All the weed stocks. During the GameStop short, all the highly shorted stocks were getting pumped. That would be like a whole theme. And then like the catalyst moves are like symphony. Like for instance, Bitcoin moves all the Bitcoin stocks. So for instance, there's a lot of Bitcoin stuff. Like look at Mara. Mara was below 5 and look at it now. From penny levels to, they're a big boy now, right? And that's like whole catalyst. Bitcoin pumped Mara. So like those are 4 different types of plays you can make. Me personally, I like the technical trades because you find your demand line, you find your support line, and I just trade in between the levels. And it's been working for me. Use my MAs, find confluences. Okay, my 200 is meeting up with my demand, with my support. That's a good place to buy because the institutions might buy at that level too. So like that's something I do. Like I prefer like the technicals. I leave all the fundamental trades to David. He's he likes going into the spreadsheets.
Technicals too. I did technicals too. Yeah, no, I mean, I agree with that, man. Like catalyst trading is something that I admit I'm getting more open to. I don't do a ton of it, but I mean, shit. Like I've been playing Bitcoin stocks this year, man. That's been straight cash, stupid cash, straight cash, right? And there's even one I posted for patrons coming up for Monday. What's today's date? So Monday, March 15, 2021, because Bitcoin just hit 60K today. And I feel like if we get a weekly close above 60K today, that Bitcoin play for Monday is going to be crazy. So I'm definitely getting more open to that. But for me, on a fundamental level, I look at investing in 2 branches. There's value investing and there's momentum investing. And every other investing falls under both. So value investing is more on the fundamental side. So I'm looking at, okay, I fundamentally can assign a value. And most times you can do it via your PE ratio. So you can say, okay, who's the leader of a certain sector? What is their PE ratio? What is the average PE ratio for that sector? Okay, so compare based on a PE ratio for that compared to the sector, what ratio? So for instance, if I look at e-commerce, I'll look at Amazon, right? I'm just giving like an example. So I'll say, okay. And again, obviously, this is just a very fun. There are much more that goes into valuing a company, but I'm just saying on a very basic rudimentary way to value, I can say, okay, Amazon has twice the PE ratio of e-commerce. Amazon's price now is, let's just say, I haven't checked Amazon's price in a minute because I'm not invested in Amazon personally, but let's say 3,500. I don't know. I'm just giving a number out there. And let's say if the industry's PE ratio was half that, I'll say, okay, well, so Amazon is 3,500, right? So 3,500 divided by 2, that's 1,750, right? Yeah, 1,750. So I'll say, okay, if I find another company that is 1.5 times the P, so remember Amazon was twice the PE ratio of the industry. If I find a company that's 1.5 times the PE ratio of the industry, on average, I'll just do 1,750 times 1.5. So the price should be around 2,600. So let's say I find a company that has 1.5 times the PE ratio as the industry, right? And let's say the price is only, it's only right now is only trading at, I'm just gonna say, let's say 1,200. So we've already valued it at 2,600. Prices are 1,200. So in that case, we're saying that based on our quick math, this stock is undervalued compared to its true value using the leader of that sector. And then obviously then you can get to the argument, well, okay, well, is Amazon overvalued to begin with and so on and so forth. But of course, you do your due diligence there. But let's just say for the sake of argument, if we classify that as an undervalued stock, then that's a perfect example of a value stock. So value stock is a stock that is undervalued in the market compared to value that you've assessed or determined one way or the other. And there are different ways to determine the value of a company. So that falls more in the side of fundamental of value investing, right? Yeah. Momentum investing is basically saying, okay, I look at a stock, I look at the annualized growth rates, so percent returns essentially in short, for the past 5 years, averaged out. And I wanted to hit 75% on average for the past 5 years. So that's simply saying, okay, it's simple regression and forecasting, right? If the returns in the past 5 years have hit at least 75%, I'm willing to guess that the return in the next year will be at least 75% as well. So it's basically looking back and saying, okay, for instance, even though a company, for instance, like Square, that has been definitely hit that's an example of a momentum stock. So you would determine what that threshold is to you. But that said, the beauty about momentum investing and value investing is that they're crossovers. Yeah. While Square is a momentum stock because it's hit, I think Square hits 120% returns for the past 5 years. It's also it's a value stock in the sense that looking at the total market share that fintech could grab in the future, looking at 5-10 years, especially with the incoming advances going on in cryptocurrency and decentralizing finance in general, compared to its potential, it is undervalued, right? And so, but people could make the argument that with its current finances and financials statements and the current PE ratio for the industry, it is very much priced in at where it should be at. So again, it depends on what you're determining as, the value, what are you looking at, the potential. Like Jumia is a good example. I think Jumia's market cap should be well in the 20, 30, 40 billions as being the largest e-commerce player in Africa, right? Jumia now is less than 10 billion. I think Jumia last I checked was under 5 billion market cap. So that's an example of something I'll say is underpriced and is a value stock based on its potential and what it should be at. Yeah, market cap for Jumia right now is 3.29 billion. So I think its market cap should be 10x of that, right? Yeah. So again, it really depends on what you determine as value and how you want to assess. So again, just to summarize, value investing, momentum investing, and there's definitely crossovers.
Yeah, okay, that's what's up. Yeah, for myself, I'll say I'm still like figuring it out because I'm somewhere in the middle, more on the value side because intelligent investor, and I think the GOAT of investing is Warren Buffett, and he's definitely, but at the same time, it's a different time. You know what I'm saying? Like, it's a different time. There's more momentum. There's more groups. Like most of like the technology companies, they're more good companies. So I'm still kind of figuring it out. I'll say 60 value investing, growth investing about 40%. Pretty much. Yo, guys, we're here in an hour, so I think we should be rounding up.
Yeah.
This was like fun.
Yeah.
Man, shout out to you guys, man. Shout out to the first episode of Finance and Vibes. If you guys have anything to like plug in, OC, David, just go ahead.
Yeah, just follow me on Twitter. No, don't follow my personal page because I'll be talking shit. But follow my business page, EZ. So letter E, letter Z, finances, the number 4, and the letter U. So EZ finances for you, letter E, letter Z, finances, the number 4, and the letter U. Let's go.
Ife?
Oh yeah, definitely follow me on Twitter, Instagram. You know, once in a while I drop a couple charts. I mean, most of the charts I put out have played out very nicely. So, you know, my Twitter is actively fast. So AKTIVEIFE, you know, active man, you know, that's pretty much it.
All right. You guys can follow me on Twitter at Joe_D_Don. I don't drop anything on there, just talk, just whatever I feel on my mind, I say. That's pretty much it. We'll talk to you guys again next week. Hope you guys love the episode. Shout out to you guys, man. Love you.
Peace out.
Peace out.